You're not about the coal, you're about the electric cars. You're desperate to buy the Rivian IPO. You think that General Motors could get pulled up with it as well. All signs still point to electric.
Absolutely, Sully. This is the EV melt-up. We talk about EV and how important it is. When we talk about the next generation of investing, we talk about the electric undercurrent. But nonetheless, Rivian, we are seeing the roadshow right now. We were initially seeing back in August when they confidentially filed for that IPO, they were talking about an $80 billion valuation. Now it's beginning to be priced more around a $56 billion valuation. If you look, if it's even related, remotely related to its second or third cousin in Tesla, I think this is a great buying opportunity as we continue to see the surge of assets into electronic cars.
Yeah, with Deloitte and others saying they expect basically a 30% annualized growth rate every year for decades in electric cars there. And EV's down a little bit right now in this Tesla Hertz news, but overall, you are a long-term investor. Jeff, at the top of the show, we highlighted what a great start to the month it was for small caps. I mean, the 600, the Russell 2000, the IWM, they're doing great. Are you a buyer? Are you a believer in the small caps?
Well, I am a believer, and we talk all year long. What's worked, Sully? We talk about this rotation. We saw a rotation initially at the beginning of the year into some of the reflationary stocks. We saw a reflation into some of the large cap blend. But right now, it certainly seems like yesterday that outperformance in the IWM, that was the Russell 2000 ETF, when you saw it up over 2.5% when the broader market was basically flat on the day, that was really encouraging to see people trying to find alpha, seeking to find alpha these last 2 months of the year. And when you look at some of these smaller cap names, certainly you are going to find, look at a name like Crocs, you are going to see some love coming into names like that as people are really trying to squeeze out this alpha because the S&P 500, it has had a tremendous year despite all the negative or the skepticism in the marketplace.
Yeah, we've also got the Fed meeting today with the decision tomorrow. I don't want to take away from our coverage. It's going to be big. But do we care about the Fed?
We absolutely care about the Fed in the same way that you cared about the Notre Dame Fighting Irish taking it to your Hokies. What we like about, I thought I'd fire you up a little bit this morning. What I thought going into this Fed meeting, how important it would be the cadence. But it's not so much the cadence of the taper. This has been the most telegraphed pitch, kind of like the World Series coming at you tonight. It's going to be one of the most telegraphed situations where we know the taper is coming. The taper has to come, but it's not about the reduction of the monthly $120 billion of purchases, Sully. It's more about this inflation outlook. If you remember just a couple months ago, Fed Chairman Powell talked about inflation being transitory. Now he's talking about persisting. So this is going to be how they thread the needle if they do see this taper go well. But remember, the taper is going to take them all the way to Q2 of 2022. And are they going to be raising rates in the face of inflation? So that's why I really want to digest it. And that's what investors will be gravitating toward. It's the velocity, it's the cadence of how they really do that 1-2 punch of the taper, then potentially moving rates if we do see this inflation persist, which I believe it is. I'm in Chicago, Sully. Inflation is tangible.
Didn't you hear us talk about, by the way, I got your knock on I was at the game, the Notre Dame Hokies game. You've never seen 70,000 people go silent that quickly in your life, Jeff. We talked about wheat at 9-year highs, our wall of inflation. We did it in October and back in April. Everything is up like 30%. Is it transitory?
Hey, I don't think it is transitory. Look at an oat chart. That's getting a little bit into the weeds from all my commodity traders out there. But nonetheless, we are seeing this transitory probably be a little bit more tangible as we move into 2022. And it's remarkable. I mean, think about the Fed, Sully. They measure inflation. They strip out food and energy. Goodness gracious. You know I love food and you know I like to drive my cars. But nonetheless, until the Fed really recognizes that, and that's what I'm looking for today from Fed Chairman Powell, tomorrow when he actually takes the podium. Will he admit to more of this persistence in 2022? And how far will they allow inflation to go? Because that's the real component. But at the end of the day, remain constructive on the marketplace, Sully, because they are not going to reduce their balance sheet. They may reduce the taper, reduce their purchases, but they're not going to reduce their $8.5 trillion swollen balance sheet.